What's going on, everyone? Welcome back to the Courtside Financial podcast, the podcast where we talk about business and technology. We've got a fascinating tale of two very different EV realities. On the one side, we've got very good news for NIO. They hit their 800,000th vehicle milestone with some seriously impressive manufacturing innovations. And then on the other hand, we've got the EU with what I can only describe as an existential EV crisis. Now, full disclosure, as you guys know, I'm a NIO bull, but this story or this episode isn't just about celebrating NIO. It's about figuring out where the global electric vehicle market is heading and what's going on today. So let's start with the good news. NIO just rolled their 800,000th vehicle off the production line. But here's what's really interesting. It's not just about the number, it's about how they're building these cars. They're operating two factories in Hefei right now. They're F1 and F2 factories at NIO Park. But September is when things get really interesting because that's when F3 comes online. Think about this scaling trajectory for a moment. What really caught my attention is how they're sharing the F1 factory between their NIO and their Onvo brand. This isn't just cost efficiency, it's strategic brilliance. They've created what they call the first lightweight car body manufacturing platform that can actually handle both all aluminum and ultra high strength steel aluminum bodies on the same line. Here's where it gets technical though, but bear with me because this matters. They're using a 9,800 ton one piece die cast rear floor technology. If you're not familiar with die casting, this is essentially creating massive vehicle components in single pieces rather than welding together dozens of smaller parts. Tesla pioneered this approach, but obviously NIO isn't just copying, they're innovating. The real game changer though is in their AI self-inspection system called Tiantan. Get this, it can automatically detect over 1,000 vehicle functions in just 3 minutes. That's manufacturing intelligence that directly impacts both cost and reliability. This brings us to Onvo, which I think represents something really important in NIO's evolution. The L90 SUV pre-sales launched on July 10th at 279,900 Ren. That's about $39,040 with the battery included, or 27 under their battery as a service model. Here's what's brilliant about the pricing strategy. They're explicitly saying that the pricing will drop further, even further at the official launch. In most markets, that would be commercial suicide, but in China's hyper-competitive EV market, it's becoming standard practice. It creates urgency while managing expectation. They've got nearly 600 test drive vehicles across 400 showrooms in 140 cities. That's not just distribution, that's market penetration at scale. But let's zoom out for a second. What NIO's really doing is proving that they can manufacture premium vehicles simultaneously with mass market vehicles. That's the kind of operational flexibility that separates the leaders from the followers in this industry. Now let's flip to Europe, where we're witnessing what I can only call an EV identity crisis that has massive implications for companies like NIO. The EU is planning to force rental car companies and large enterprises to only buy electric vehicles from 2030. So we're talking about 60% of EU's new car business. That's 6.4 million vehicles annually. That's not a small policy tweak. That's a massive market transformation by legislative force. But here's where it gets interesting. German Chancellor Merz condemned this plan in July, calling it potentially damaging to Europe's automotive industry. When Germany pushes back on EU automotive policy, you know that there's a serious economic concern or concerns at play. The resistance isn't just political. Companies like Sixt, Hertz, and Enterprise have already been cutting their EV fleets due to insufficient charging infrastructure, high maintenance costs, and poor resale value. Sixt CEO called it unreasonable, pointing out that people who are traveling don't want to rent electric cars when there's not enough charging infrastructure. Here's what the data tells us. Gasoline cars still hold 33% of the market share in the EU, while electric vehicles dropped from 14.16% in 2023 to just 12% in 2024. That's clearly not transition, it's retreat. European automakers are responding by abandoning their full electric timeline. BMW's senior VP said, "Internal combustion engines are our foundation. Audi won't set clear ICE phase-out dates anymore. Mercedes-Benz, Volvo, Porsche, they've all pushed back their electrification plan." But here's the crucial part. While Europe wavers, China is accelerating. Chinese exports to Europe increased 1,591% from 2019 to 2024. China now accounts for 70% of all global EV production and over 75% of battery supply. Chinese batteries are 30% cheaper than their European alternatives and 20% cheaper than North American ones. So what does this uncertainty mean for NIO's global ambition? Here's where I think the market is missing something crucial. Look, NIO's not exactly firing on all cylinders in Europe right now. Their European operations are still relatively small. But honestly, that's not the crisis that most people are making it out to be. Yes, NIO has plans for Onvo to eventually roll out in Europe as their mass market brand and Firefly as their subcompact brand. But European current EV retreat actually makes NIO's China first EV approach look a little bit more genius rather than concerning. This is about China, the world's largest EV market, period. We're talking about a market that's electrifying at scale while Europe debates and retreat. Why would you want to be heavily invested right now in a market that's actively pulling away from EVs when you could be dominating the market that's moving full speed ahead? The manufacturing excellence we're seeing in Hefei facilities, the production line, the die casting technology, these investments make sense when you're building scale for the world's largest EV market. What's brilliant about NIO's approach is that they're building different brands for different segments of China's EV market. Premium NIO, mass market Onvo, and compact Firefly. It's not just product diversification, that's comprehensive market capture in the world's largest EV battleground. So when people worry about NIO's European expansion too much at this point in time, I think that they're missing the forest for the tree. Better to build unsaleable advantages in the market that matters most and then expand from a position of strength rather than spread yourself too thin in the beginning. So of course I remain bullish on NIO, but I think today's story illustrates why manufacturing excellence and domestic market strength matter a lot more and carry a lot more weight than a lot of people think. Europe's EV retreat isn't just about European companies, it's about timing and competitive positioning. While European automakers might find themselves slowing down on electrification, companies like NIO are using that time to build insurmountable advantages. The 800,000th vehicle milestone isn't just a production number, it's a proof of concept that NIO can manufacture at scale while innovating at speed. In a world where Europe is second guessing its EV future and American automakers are struggling with profitability, that manufacturing competence becomes a geopolitical advantage. Anyways, that's it for today's episode of the Courtside Financial Podcast. I hope you found it useful, insightful, valuable, at the very least entertaining. If you found it any of those things, make sure you hit the subscribe button, click the like button, leave a comment down below, click the notification bell icon. It really does go a long way in helping out the channel. We'll see you in the next episode next week on the Courtside Financial Podcast. OB signing off. Thanks for watching.